PayPal tried to buy Pinterest. Pinterest swiped left. Should you slide into Pinterest's DMs and buy this stock? We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are having a great day out there. Pinterest just reported their earnings. Those came in after the bell. We're seeing fantastic Google, like 43% revenue growth on that top line. We've got to talk about that. We'll talk a little bit about the guidance as well. I want to show you a little bit of the monthly active users, kind of maybe an interesting situation that you may not be aware of if you're an investor in Pinterest. And then we'll go through these numbers. We'll take a look at the revenues, the profits. We'll see maybe why Pinterest doesn't want to sell itself to PayPal. Talk about that. And then we got to talk about this from a technical perspective as well. Stock is trading up in the after hours, actually nicely by about 6%. That's off being down 2.33% during the regular trade. But here's the deal very first. Before we dive into these numbers, before we get into a deep dive of the Q3 over at Pinterest, what I want to talk about is over the last year, this stock's actually down 25%. Year to date, this stock is down 32%. That's why here on the Investor Channel, I do not post videos just for the clicks, the views, the subscriptions, although I certainly appreciate anybody that subscribes, anybody that hits the like button on this video. I really appreciate it, but we preach time and time again on this channel is you need to buy the gold medal winning stocks, because they are the ones that perform. Here's what I want to show you just before we get into these Q3 numbers is the fact here we've got a price to sales basis. And quite frankly, all these companies are basically comparable. They make the vast majority, even when you're looking at a Google and Facebook's metaverse dreams, these companies all make money online advertising. At least 90, probably even 90% to 100% of their revenue comes from online advertising. I think this is one of the few sectors you can literally compare to each other. I'll show you here. Pinterest is in orange, Facebook is conveniently in blue, Twitter is in purple, Google is in green, and Snapchat is in red. Google and Facebook are the gold medal winners when it comes to online advertising. I don't think anybody's going to disagree with me. I don't think anybody watching this video legitimately thinks Pinterest, Twitter, and Snapchat will ever catch them when it comes to revenue in the online advertising segment of the business. But you are paying a premium for Pinterest. In fact, you're paying 12 times. Twitter, you're paying 9 times. Snapchat, you're way overpaying. That thing's up at 21 times. That's going to come down even further. Where is Google and Facebook? And where have Google and Facebook consistently traded at over the last 3 years? And I'm sure you can probably zoom this out to 5 years. Yeah, these stocks have consistently traded under 10 times sales. So if I'm going to buy one of these online advertising stocks like that Pinterest, Twitter, and Snap, which are destined to win silver, bronze, or not even make the podium when it comes to online advertising competition, well, I better be getting it at a great valuation combined with a fantastic growth rate. Tell you what, right now, Pinterest sitting at 12 times sales. And when I talk about that, the fact that they grew their revenues to $632 million, that is 43% year over year revenue growth. It beats street expectations by $1.83 million. Those are starting to get very close to lining up in terms of a second place investment. You're going to invest in pins only if you have investments in Facebook and Google already, and you want to pick up more market share of that online advertising. If you're going to buy a stock like Pins, you need to get it at the right price because of what I said to lead this video off. Year to date, the stock's down 32%. Over the last year, stock's down 25%. So if you didn't time your purchase correctly, you would be down on this investment, where it's damn near impossible to have done that with Google and Facebook, Google in particular. So Pinterest is growing very nice on this revenue side, and they need to continue this type of revenue growth. We'll see if that's possible here in a second. Now, what I did want to talk about, the company gave extraordinarily color and guidance on their user base over the next quarter. So what I want to show you first is this is monthly active users. This is based on Q3. This is the quarter we'll talk about from a financial perspective here in a second with Pinterest as well. But we noticed that, I don't know if a lot of people know this, but this company actually has a vast majority majority of this company's users are actually international. We see that over the last year, that from the international users perspective, we went from 343 up to 356 million monthly active users. And what I wanted to talk to you about was the fact that Pinterest actually gave guidance for the upcoming quarter on that, which I thought was actually pretty cool. Their global monthly active users is 447 million as of November 2nd. So we're expecting this number to actually tick up a little bit. And we're seeing that United States monthly active users is coming in at 89 million in the most recent quarter. And that looks like it's going to stay flat on a quarter over quarter basis. Now, what's not staying flat over at Pinterest, and this really should have you excited if you do happen to own these shares, is they are squeezing out more average revenue per user. Look at the United States. So you don't necessarily need user growth here in the United States for Pinterest. They just need those users, honestly, to stay about the same, if not grow a little bit, because look, they went from $3.85 ARPU per user last year. Now you're all the way up to $5.55, and I bet they can get even more out of that. Now, what should also be exciting, but also a little bit hampering to the financials of this company as well, is since they have way more global active users, and this is the number that is likely to still continue to grow. Now, unfortunately, these users are not nearly as much as American shoppers who, run the limits on their credit and maybe buy things they can't afford. Well, you can afford to earn $5.50 per user. Well, internationally, you went from 21 cents up to 38 cents. Now, will the international user ever get close to the United States user? I don't think so, barring some kind of financial depression here in the United States where everybody has to kind of give up their credit cards. Well, no, I don't think that will happen, but these numbers are growing nicely on that international side, and that should be a positive for Pinterest. Now, these Q3 numbers came in. I'm really impressed with what I'm seeing. Okay, the revenue growth, yes, it's Google-like, because I believe off the top of my head, we saw Facebook grow in the 30% range. Facebook was much closer to 40%. I think if you're going to buy a Pinterest, it's got to be growing faster than Google and Facebook, okay? Maybe at least as fast as the market leaders, and Pinterest is. So it definitely checks that box. And if they can continue this type of margin expansion on the ARPU, especially on the international side, but definitely here on the United States side, well, that should continue. That revenue growth should continue, even if they stall out a bit in terms of monthly active users on the platform. So I love what I'm seeing here. I tell you what I'm loving even more. Look at this total cost and expenses, okay? We grew our revenues by over 40 some odd percent over at Pinterest. Look at these total costs and expenses. Went from 539. I don't believe this. It went down to 534. A round of applause for the management over at Pinterest. I love seeing this, okay? And when it goes the other direction, I absolutely eviscerate the company and eviscerate the stock. In this case, I love what I'm seeing, because look what we did. We had a $97 million loss last year, and now we got a $98 million profit. No wonder this company had no interest of selling itself to PayPal. And no wonder PayPal's banging down the door and leaking out press releases that they want to buy this company. No wonder. They're seeing exactly what I'm seeing, because if somebody acquires these companies, there's a lot of cost synergies that you can get across the board here, okay? You wouldn't need to maybe have as big as R&D spending, sales and marketing spending, general administrative expenditures would have went way down. Look at that. That went from 148 all the way down to 65 million. Man, they've been doing a great job over at Pinterest. I absolutely love what I'm seeing here, and no wonder PayPal wanted to buy this. And I bet Pinterest, quite frankly, has other people knocking on their door trying to buy this business, because they see what I'm seeing here, and this is absolutely fantastic from that perspective. Now, from a cash flow perspective, could it get even better? Yeah, it actually could. Look at this. You pull down a net income for the last 9 months of $141 million. Now you get to add back in $275 million worth of stock-based compensation. That's hard to say with a straight face, okay? Because you actually paid out more in stock-based compensation. In fact, almost twice as much in stock-based compensation as you earned in net income. So it's hard for me as an investor, number one, to really respect the most recent 3 months ended in terms of financials. I love what I'm seeing here. I love what they're doing, but we have to factor in on cash flows that they do get to add back in just a massive stock-based compensation number, although it's relatively in line with a year ago period, and they've printed more profit to that bottom line. I love what management is doing over at Pinterest. They printed, after you add back in stock-based compensation, $541 million. $541 million worth of positive cash flow. Now, this company does have a $28 billion valuation, but when you factor in over the last 9 months that she had $541 million worth of cash flow, kind of turning a blind eye that a lot of it's stock-based compensation. Still very, very nice. Nothing really else going on. As you'd expect from an online advertising business, this company really doesn't do a whole lot. Okay, these financials actually look a lot like Facebook, look a lot like Google. That's what has me excited, especially if this stock continues to pull back. Now, it's not pulling back in the after hours. During the regular trade, we were actually sitting down here at about $43 per share, but we've ticked up to about $46 per share. But what I'm seeing is we've really rounded out here in terms of Pinterest. This stock looks like it really has kind of forming kind of a topping pattern, and it's heading lower in my opinion. Now, this is more of a macro call. We've had the Fed come out and say that they're going to taper. Interest rates are likely going to rise. As interest rates rise, interest in stocks like Pinterest, quite frankly, I think are going to go down. It wouldn't surprise me, and this is kind of a weird call. I know this after I looked at these financials. I like what I'm seeing. The fact that this company had an unsolicited, what we think, an unsolicited bid from PayPal to buy the company wouldn't surprise me. And I'm not necessarily speaking just strictly about Pinterest at the current time, but I'm seeing this formation in a lot of stocks that really have a high flyer over the last year or two since we made lows down here when the virus started. Well, it wouldn't surprise me if he gave all the way back, and that would bring this stock all the way back down to $27 per share. Now, would we hit there exactly? I think we'd stall out here at $33 per share. That's only about $10 to $13 lower than where the stock is. I think if you have interest rates continue to rise, you have the Fed start to taper, these second, third, fourth place stocks like a Pinterest will likely continue to go down. But that's why we're monitoring these stocks right now, because quite frankly, if we can get Pinterest at a really good valuation, I think it's on the edge right now. I'd love to get Pinterest at a price to sales less than Facebook and Google. Okay, then I think you're getting a value to what I perceive as the gold medal winners, and then we're getting a growth rate that could potentially beat the gold medal winning stocks. On top of that, you got management just doing an absolutely phenomenal job with these financials. So if we can get the macro environment, I'm kind of wishing out loud right now. I'm kind of wishing that the macro environment will continue to push down stocks like Pinterest. Because look, it's been pushing it down, okay? Some of this is Pinterest related. Some of it is online advertising related. But some of this is interest rate and tapering related as well. Stocks like these are just going to give their gains back, okay? There's just money that's going to flow out of these types of names. Interesting stock at these levels. I think you could make an argument to buy the dip at this point. If you do see a sign of reversal, okay, we're making low, lower low, lower low, lower low, lower lows, okay? But if we can come back up here, hit the $51 level, start making a higher low on this one, then I think maybe you could make an argument for buying the dip. Me personally, I'm waiting to see if this is a complete top to the market and we do a deeper pullback as we head into Q1 and Q2 of next year. The macro environment is pretty rough out there, quite frankly, and it could get worse before it get better. And I think that could pull the valuations of stocks like Pinterest down and get us into areas where this absolutely could be a stock that we could buy. That was Pinterest. Hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.